Welcome back. Well, let's focus on a domestic theme. That's cement. Lakshmi Cement, that's the next management on our radar. It reported a solid set of numbers in Q4, and the street is optimistic on prospects of FY26. Mr. Arun Shukla, the President and Director of Lakshmi Cement, joins us on the show. Hi, Mr. Shukla. Good morning, and thanks a lot for joining in. Well, tell us, what were the signs in terms of demand on ground, as you started off this quarter? And this early monsoon, has it spoiled the plans a little bit? What kind of a volume growth can you deliver in FY26?
Good morning, Prashant, and thanks to you for having me here today. Yes, we had a very good quarter last quarter, and things have started, moving well from third quarter on. As far as demand goes, I think things are all right. Typically Q1 is good, and despite early monsoon, I don't see any kind of setback in terms of demand. So things are all right on demand.
All right, Mr. Shukla, this is Nigel on this side. Just wanted to quantify that. If you could quantify for Q1, what kind of a volume growth have you delivered? The same quarter last year was obviously on a low base. We had elections and, various other problems. But for Q1 so far, what is the volume growth? And for the year, you've been talking about outbeating the industry. So what kind of volume growth should we work with?
So, Nigel, I think Q1, last quarter, the same quarter last year was not good because of elections and capex has got delayed. But Q1 looks to be good, and we see that industry is going to grow at the rate of about, let's say, 6-7%, and we are going to be in alignment with that. Maybe I think we'll do a little better than industry.
Got it. All right, you'll do a little bit better than industry. Let's focus on pricing then. The positive surprise in your numbers was even on pricing on a sequential basis. I think you had close to around a 5% recovery in pricing on a blended basis. How do you manage that? And also, when you've joined us in the past, you've said your focus is on increasing the premium segment as a percentage of trade sales. So what is the number at currently, and where is it headed?
So premium, Nigel, we are at 25% of our trade volume, and we are doing very well. Perhaps we are the best in the industry in terms of premium volume. That is one. I think we have been doing a lot of activities in terms of, improving our, top line, and hence also the price which we get from the market. Just to let you know, in the month of January, we launched Green Plus brand, and perhaps we are the first one in the industry to launch a green cement, which is having the least clinker factor. So that has also helped us to improve our price positioning in the market, and hence also, in terms of, price growth with respect to previous quarter.
Okay, all right. And from 25%, where will it go with these new launches? Do you see scope for improvement in this year itself, and maybe in a 3-year time horizon? Where is it gone? Where will it move?
Our plan is to take it to 30%, and I'm talking about premium product, and we call it Pro Plus cement, right? Lakshmi Pro. And Green Plus is our base brand, right? So a major volume comes from Green Plus. And the premium product, which is Lakshmi Pro Plus, is about 25% now. We are going to take it to 30% in maybe coming 1.5 to 2 years' time.
Okay, and the pricing difference between premium and normal sales is how much?
On per bag basis is about 25 to 30 rupees in different markets.
All right, and I think your core markets will be North, Gujarat, and I think parts of East as well. In these markets, if I compare the Q1 average, Q1 of this fiscal average, in comparison to Q4, is there a pricing difference? If yes, what will blended realizations look like? Will it be higher?
Prices are flat. If you look at Q4 prices last year and Q1 this year, prices are almost flat. Prices have not gone down, but at the same time, prices have not gone up as well. So I see that prices are going to be about range bound only. And I don't see that, it's going to be a major increase over the last quarter in terms of pricing.
Okay, pricing flattish. Let's talk about the other part then. On the cost side, you all have been focusing on green power, renewable power as well, and that obviously helps the cost of production come down. For this year, what kind of cost of production reduction? That's FY26 and FY27 as well. You have some kind of a plan. So on a yearly basis, how much will cost of production reduce? Because that's in your hands, right? Cement pricing may not be in your hands, but what you can do internally, that's what's going to help you in terms of profitability.
Absolutely, Nigel. I think this is what we have been doing before, right? So we are working inwardly, and if you look at the EBITDA per ton gap, which we had with the leaders in the industry, now we have bridged it up quite a bit, right? And we have been working internally and particularly on efficiency part of it. On the renewable energy front, we are doing quite well. We are already at about 50% when we exited last quarter. Our plan is to take it to 53% by end of FY26. So this is one major actions which we are taking. Second is, of course, I think I told you the brand rejuvenation which we have done. Green Plus we have launched is doing very well, and also premiumization of our product in the market. So that is second thing. Third, of course, we are doing on the non-fossil fuel uses. We are already at about 10 to 11% on a console basis. Our plan is to take it to 15% by end of this year. So I think we are taking a lot of actions on efficiency part of it. Not only this, we are using technology to improve energy efficiency and throughput in our kiln and mills. So we have deployed algorithm and AI module in different plants. And on supply chain front, we do have kind of end-to-end digital integration, and by which not only we are giving differentiated services to our customers, but also we are trying to kind of make our value chain more efficient. So I think all these actions which we are taking now.
Focused on pricing, focused on cost of production, which brings us to the goal. EBITDA per ton. Last year you did ballpark around 650 rupees per ton. This year, given the measures that you're taking, should we work with an EBITDA per ton of around 850 rupees per ton? Should that be a fair number?
So I think we are doing quite a bit. I think the plan which I just enumerated, I think is going to give us about maybe 75 to 100 rupees a ton on internal efficiency, right? And if prices are going to go up, then I think that is going to over and above.
So 200 rupees per ton improvements is okay for us to work with?
I think 1 year time horizon, 1 year FY26 exit, we see that improvement of about 75 to 100 rupees a ton, internal efficiencies.
Yeah, but then there'll be pricing as well, right? So we should work with around 850 rupees per ton of EBITDA?
I think we are quite optimistic. The kind of actions which we have taken, which I told you, is going to give us definitely a good improvement in terms of EBITDA margin.
All right. Very quickly then, by when does that merger take place between Udaipur and JK Lakshmi Cement?
So that is at a very advanced stage now. Maybe I think it will take another couple of months.
Okay. And what about the debt in your books? Currently, what is it? And given that you have an ambitious plan to move from, I think, 16 million tons, you're going to be moving to around 22 million tons in the near future. And then the ultimate target is 30 million tons. Could you quantify the absolute debt currently on a consolidated basis? And where is that headed?
On sole basis, we have a net debt of about 1,300 crore and net debt EBITDA is about 1.51, right?
Okay.
And yes, I think we have a plan to go to 30 million ton, but maybe within next couple of months we'll reach to 18 million ton because we are expanding one of the plants grinding station in Gujarat. So that will take us to 18. And along with that, the 4.6 million ton which we have announced that will take us to 3 million ton.
Very quickly, sir, in the next few days, it's going to be a cutoff with regard to bidding for JP's asset. Are you all interested? Have you all submitted a bid?
So I think any opportunity we look at from a strategy point of view, and perhaps I think this is not fitting into our overall strategy.
Correct.
All right, we'll leave it there. Thank you very much for joining us with that perspective. Appreciate it.